Hi everyone, this is Pruthviravindranath. Thank you for tuning into this channel. Today, we are diving into the world of personal finance and demystify a topic which is considered complex, but it's rather simple. And the topic is mutual fund. If you have ever wondered what a mutual fund is and how it can be a game changer for your financial goals, then you're in the right place. So grab a bucket of popcorn and let's get started. Alright, then let's start from the basics. Just imagine you and your friends are pooling money to buy something awesome, like a giant pizza, and everyone chips in a little, and at the end, you get a slice of the delicious pizza, right? Well, mutual funds work in a very similar way. It's a big, giant money pool party, but not for pizza, but for investments. So mutual funds is basically a giant money pool wherein a lot of people put that money with a similar objective. And this money is managed by a professional financial expert who knows the markets, who has the knowledge and expertise to manage this money. And also, this fund house and fund manager is guided and regulated by a government entity called Securities Exchange Board of India. So mutual fund is a highly regulated investment vehicle. What does this fund manager do? This fund manager uses this money to invest in securities like stocks, bonds, gold, real estate as per the objective of the fund, and decides when to buy, when to hold, and when to sell the securities. So just like you get a share of a slice of the giant pizza, here also you share the gains and losses of the investment, and these gains and losses will be shared by all the people who have invested their money into this fund, right? So to summarize, a mutual fund is a money pool wherein this money pool is managed by a financial expert, and it is highly regulated by a highly regulated investment vehicle wherein a layman investor like you and me can invest in this investment vehicle and achieve our financial goals. But why do you want to invest in mutual fund? That's the question. So there are a number of amazing reasons why you need to consider mutual fund as an investment vehicle. First off, mutual funds provides instant diversification. Say you are investing in stocks. Instead of putting all your money into one or two company stocks and risking money, you can invest in a mutual fund wherein they invest in a bunch of different companies, and thereby your portfolio is diversified. So if one or two companies or one of five companies are not performing so well, then also your portfolio will not take a hit. So the first reason is instant diversification. Secondly, mutual funds give access to investments where a retail investor cannot invest. I'll give you an example here. Consider you want to invest in three stocks: Nestle, MRF, and Honeywell. Nestle is around 22,000 as I speak today. Honeywell is around 40,000 and MRF is around 1 lakh. Altogether, it might be around 1.8 lakhs approx. To buy each stock of these three companies, amount what you require is 1.8 lakhs. And for retail investors like you and me, it might be difficult for us to buy these stocks. But through mutual fund, you have access to it. You'll be able to buy these stocks through a mutual fund route because there are a lot of people who are pooling money, and the fund manager uses the money to buy the stocks of the company. So we are getting a proportionate component of that stock in our portfolio. So second reason, access to investments wherein retail investor can't access it. Third main reason, we are able to get access to the fund manager's expertise. Understand here, the fund manager's mission is to make sure our investment grows. They are working to make sure our investment grows. Okay, and for that they will be having the best team, they buy the best softwares, they are keeping eye on the markets, they have the resources to understand what needs to be done with the investments, when to churn the investments, all those things, wherein a retail investors like me and you can't do it, can't have that access to that kind of information. Okay, and they have very good ground knowledge what is happening with the company, wherein we as retail investors can't access it. So this is third reason wherein you have access to fund managers expertise and knowledge. So these are three main reasons why you need to consider mutual fund as an investment vehicle. Just like flavors of ice cream, we have different types of mutual funds for different types of financial goals. Consider you are an investor who wants stability and you are okay with lower returns and slower growth, and your investment horizon is less than 5 years, then it is better to start off with a debt fund. Debt fund is an option. If you want to take some financial risk for potentially higher returns, then a equity fund might be a great place to start off with. But if you want a bit of both the worlds, then a hybrid fund might be a great place to start off. We should not forget there is one more investment in mutual fund called index funds or exchange traded funds, wherein their purpose is to track a particular index, and they are not actively managed, they just follow the index. Okay, so I will be explaining about what actively managed funds are or what and passively managed funds are in further videos, but these are basically basic categories of mutual funds: equity funds, debt funds, hybrid funds, index funds, and ETFs, right? So let's keep it simple for this video. Ready to dip your toes in the world of mutual funds? Great. The first step is to do research. And research, I mean here not mutual fund research, but internal research. And what does internal research mean? Understanding what your financial goals are, what is the tenure of your investment, what is your risk profile. We need to understand some more things about ourselves, and then a type of mutual fund can be researched on. So we need to understand your financial goals, your risk profile, your tenure of investment, and select a right mutual fund which aligns with the with these three things, right? And to execute investments, we need to open an investment account with a brokerage firm or a mutual fund distributor or a SEBI RA firm. It is always better to start investments with a guide like a mutual fund distributor or a SEBI RA firm. There are a lot of online platforms, but still recommended to do through a guide. Okay, and at last, I need to mention this: mutual funds are subjected to market risk. There is risk in it. So we need to be patient and we need to think long term if you are investing in mutual funds. There you have it, a scoop on mutual funds. Mutual funds are a convenient and a delicious buffet of investments managed by pros, regulated by SEBI, and aligned to your financial aspirations. You might be a newbie investor or seasoned investor. Mutual funds are a great way to invest in markets. So if you have found this video useful and helpful, please share with your friends and family members. Don't forget to hit that like button and subscribe to my channel for more exciting content on personal finance and investing. So go forth and make money work for you. Until next time, happy investing.